Thanks for joining us. I'm Marlon Bowling with you on a very important Tuesday. We have some big USDA reports coming out at 11 o'clock Central Time. We'll get to those when they are released here in about a little over an hour. Now, in the meantime, I want to cover some of the numbers that came out from USDA late yesterday. We had some cotton updates as far as the condition around the country and in the key producing states. These are your top 5 states right here. And it is noteworthy, Texas went down 2 percentage points in their condition rating on the good to excellent category, down to 48%. However, Georgia, which has been very dry in some areas, it did go up 3 points. They're ranked at 64% good to excellent. Mississippi went up a point at 57. Alabama up 2 points at 46% good to excellent. North Carolina stayed the same at 60. And then if you go into the next 5 states, California dropped 10 percentage points at 70%. Now, it is important because last week they went up 10 percentage points to get up to 80%. So now we're back where we were 2 weeks ago. Arkansas went up 3 percentage points at 73%. Missouri only 37% ranked good to excellent. That's very interesting there. Not a very good condition in Missouri. They did go up 1 point, however. In Oklahoma, we actually went down 1 point, and they're at 54%. Arizona down 1 point at 92%. So let's go ahead and go to Chicago. Let's bring in Todd Bubba Horwitz. He's with BubbaTrading.com. Let's talk about the grain market activity heading into the big reports coming up in a little over an hour. Todd, how are you doing today?
Good morning, Marlon. Obviously, they like soybeans, and corn and wheat are under a little pressure.
Yeah,
so,
yeah.
Another news story, right? It's kind of been this way for a while. Again, you know me, I'm not a big worrier of what the report's going to say. I think the markets are kind of telling you what they think. I think soybeans have stubbornly stayed higher, although obviously at the end of last week we had some pretty good pressure, and yesterday had a reversal after being higher, closing lower on the day. Overall, I think we look pretty good in the space, but again, we're going to see how we react off of this report, and that's what I'll be looking for, is to trade off of that report. I think we're going to go higher. I would be looking to buy down at lower prices here, especially in corn and wheat. I think we're somewhere near, if not on, a bottom in which I'd like to participate. I think soybeans have a little bit more room to work, a little bit more work on the downside. I'm looking, for me, we saw 10.20, which was my first target, which we met on Friday. I think I'm looking for probably $10 would be my actual target before I'd want to get overly bullish. If they keep going up, then I'll reevaluate. But for now, that's kind of how I see those markets.
What month are you talking about?
November and December. November beans and December corn and wheat.
All right, let's take a look. On soybeans, we have August currently 12 higher at 10.89. I had a fairly wide range today from 10.92 to 10.73. September now 12 higher at 10.75.5. November new crop soybeans currently up 11 3/4 at 10.66 3/4. Kind of interesting to see that big of a move heading into a report. On the corn, as Todd mentioned, we have the September corn under pressure, down 3.5 at 3.44 3/4. December down 3 at 3.52.5. On the wheat trade, now in Chicago, we have September down 2.5 at 4.28. Kansas City, September is now trading 2 3/4 lower as well at 4.14. And Minneapolis spring wheat trade has the September contract down 2 3/4 at 4.97. That seems to be a popular number. And the cotton market, will check that out here too. It has had a tremendous run this week. Right now we're still up above 68 cents. We have the December contract at 68.17, and that is up 39 points once again. Got up as high as 68.28. Todd, what I'm going to do is I'm going to take a real short break, and I wanted to talk with you and get your analysis on this livestock trade. Things are getting ugly fast in the cattle market, and we'll talk about that when we come back right after this.